Wow. All right, everybody. Here we are. And I am back for my absolutely stupendously, fabulously lovely post-market wrap-up on this Wednesday, October 24th, 2018. People, let me just start off with this. Well, something very interesting happened. In case you missed it, both the S&P 500 and the NASDAQ are now negative for this lovely year. Despite this being a really great economy. Let me say this too, and this is not good. The Russell 2000, the small cap index. These are the companies that are based here in America. To say the least, over the past month, have cratered. Now, again, there's the what's going on here. So this economy is so great. Why are our companies here based in America, I'm not talking about international companies here, why are they cratering? Why did we get yet another bad round, very bad round of economic news on the housing front? New home sales hit like a 2-year low today. I mean, we're getting round after round after round of bad economic news on the housing front. Everyone's ignoring it. It's being ignored. Why? Because they're not being told the truth. And this is what gets under my skin. People are still being told the lie. And this is a lie, people. You know it is if you follow this blog, that our economy is booming. Remember this. We went from a kind of a soft recovery to a fabulously booming economy overnight. No, we did not do that. The stock market did that. The stock market absolutely did. And I told you it would the day President Trump was elected. I am on public freaking record saying it was a game changer and stocks were going to vault higher. Well, guess what happened? I was 100% right. Yeah. Although, again, of course, I had to take ridicule for that. I had to be belittled by that. But I get to say, hey, everyone, guess what? I was right. I know it's not from you guys and girls who understand this, who follow my work, but you almost don't have no idea probably how hard I get trolled. So let's talk about this market a little bit, how it played out, what they attempted to do here in the bond market. I want to talk about that too. So look, stocks earlier today when I did my video blog, they were down, but not by much. When we got hit with yet another round of bad economic news on the housing front, boom, automatically stocks just started to bleed off. We're getting earnings coming into, and for the most part, they're not as great, I believe, as Wall Street would have expected them to be. But this market's, again, at least till now, not being driven by anything real. You know that. I want a real market so bad I can taste it. I can taste it. What does that mean? Stock market would probably be about half of what it is right now regarding the Dow Jones Industrial Average, but it would be real. This whole thing is just too twisted. It's absolutely twisted. And I'll hopefully, look, we can always hold out a little hope that maybe we're going to get some reality in this market at one point. Maybe it's starting now, but let me put a perspective on that for you. As I am doing this video blog, in fact, I want to show this to you so you can see I'm not pulling this out of a freaking hat because it's incredible. Here, where are we here? Let me see here. All right. Let's have a look. Can you see the 10-year yield there? 3.11. Epic. Off the freaking Richter scale bond buying today. Could you only imagine for just a second if that was not occurring, if bonds were not being propped up here? This might be actually somewhat of a safety play, which I think we might have seen the other day as well. Talk about that in a second. If that were not occurring, could you imagine what the stock market would have done today? I believe the Dow Jones Industrial Average, let me get this right, because the market just closed. It didn't settle out yet. Dow Jones Industrial Average, well, it's still not settling out here. Let me see if I got the right number here for you, because I don't want to tell you the wrong thing. I do not want to do that. Dow Jones Industrial Average finished down a lovely 608. Pretty incredible, huh? And again, you know, look, I believe that everybody knows, it's no secret. Even the Confederacy over there, the Confederacy of Dunces, who wants you to think that the stock market, you know, it's not overvalued. It's just overinvested. Yeah. As long as you understand that, we're all good. It's not real. It's going to correct to fair value. Are we going to do it now? I mean, I guess, again, we can hope that happens here. Let's talk about why this looks like maybe a real safety play with cash flowing into the bond market like this. Who knows? We might see a 10-year yield lower than 3% in a couple of days if this keeps going on. We will see. But look what they did to gold and silver. Earlier today, gold and silver, both of them were higher, despite the dollar getting stronger. I explained this to you in the video I did earlier. Then, of course, they managed to pound both gold and silver down. Silver did finish down a little bit at the end of the day, but gold put on a gain. So this might actually be a legitimate safety play. It's very difficult to tell because, I mean, in a real market, you have risk on, risk off. Not anymore. Not anymore. You know, they prop up that bond market, so you get a rally in the bond market and a rally in the stock market at the same time. It's unheard of. It's unheard of. But in this reality, this is what we have. It's just so sick. Before I forget, I did add some new positions today. These are credit spreads to my portfolio, and all of my positions right now are posted on my website, traderschoice.net. Click on the link in the description of this video, left side of the page, and you can see all my credit spreads right there. Hopefully that'll give you an idea of what's going on here. Learn credit spreads, people. You know, it'll make you sleep a lot easier at night, regardless of where the market goes. You know, you can try to keep getting fancy here and buy naked calls and naked puts, however you want to play that. But understand, although there is an enormous profit potential, there's also a pretty large chance that you will not be successful, especially with this market volatility. It's crazy. I mean, up 800, down 800, up 500, down 500. You know, it's just nuts. So we need to keep our eye on these things, people. So look, let's just summarize here. Stocks got walloped today on the back of yet another round of bad economic news on the housing front. Again, the housing prices are creating a wealth effect, just like they did last time. People believe housing prices are only going to go in one direction. They're taking out loans against their homes. Sound familiar? They're taking out credit cards, thinking, hey, you know, it doesn't matter. I'll melt this thing because I have all this equity in my house, and then all of a sudden it disappears. Look, the economy here in the United States, believe what I'm telling you, is not what it seems. Nothing is what it seems like it is here. And the distractions, the lies that are being fist-fed to everyone, not just here in the United States, globally, that this is a global recovery, it's over. And in 2008, that was it. Party ended. This is just all propped up and fake. You know, that was just a first round of what's coming here. This next round is going to be the grand freaking finale when this reaches fair value. And people are going to be walking around the streets outside my house. You see this window here? Like zombies. They're not going to know what has hit them. And why? Because they are being lied to by not just leaders here in the United States, but around the world. It's very sad. Very, very sad. All right, with that said, what can I say? We will return tomorrow for more loveliness, more festivities, all kinds of fun and games. It's going to be great. Looking forward to it. See you then.